The famous kitty has posted again, and it seems as though he may be exiting his chewy position while GameStop makes a run for it. Today showed GME's true resilience against capitulating markets, and it was miraculous to say the very least. Let's check the statistics, technicals, and options flow for price moving forward. Welcome back to the channel on this Full Port Friday. This is ARCa, and let's dive into GME. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor, hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at GME here. But first, actually, you know what? Let's go ahead and pull open the options flow, right? We're going to look at the chart right now and take a look at this. Right now, max pain for GME is sitting at $22.50. And on the chart here, actually during the, we're pretty much close to it, even in the post market right now, $23.92 post market and actually present price as well. So what are we doing here as far as max pain? $22.50, right? Very good. Now I want to go ahead and shift over your attention here on the options calls versus puts ratio. Please take a look at that 86% versus 14% call to puts, right? So let's just go ahead and take a look at now the open interest and see what we have in line for GME moving forward. So using the term here, we can definitely see that there is a massive bullish sentiment over at October 18th call options, right? And that is actually by a massive margin of 161,700 to 71,700 puts, right? And also into January 17th, 2025 expiries. Please notice as well that the September 20th and September 13th also have a lot of call volume as well. In fact, it's there's really no other week here that has the red above the blue, right? Very interesting times here, right? So, and as we see, let's go ahead and take a look at the open interest percentage change and take a look at this. So what you're noticing here is the expiry on top, calls and puts, right? And you're noticing the strikes right over here. But what happens here is that this is the open interest change. So there are people exiting or losing interest inside of these puts. So take a look at this. The $25 strike puts for the expiry of the 13th of September has minus 764, right? Take a look at this change here, minus 600 at the 20 strikes. And it looks like there's addition to the call volume, right? So take a look to the call open interest, right? So 1,056 to, actually, sorry guys, this is the, I totally missed it on that one. So the calls are actually exiting here on the September 20th. Oh, you know what? I understand what's happening there. Yes, these are the actual take profits, right? Because of people running close to, I think, in the money for every single dollar that you go up on the options chain or in the options contract, the delta gives you that value. So say if you have a 30-cent delta or a 40-cent delta, that means that it would be 40 cents times 100 shares of the underlying, right, for the contract. So that would be $30, right? So $30 of delta for every dollar increment that moves up or down. So I can see why people would start taking profits on this on the run up today, which creates extra volatility, but all good. But very interesting here that we were starting to get some extra attention to the $25 strikes on the call side here, right? So very interesting there. And also there's a change here too. There's an additional 651 calls to the open interest in the 22 strikes, 344 as well right there, right? So other than that, yeah, bright numbers right over here for the 18th of October. There is 2,200 open interest change on this on a $30 strike. So why don't we just go ahead and take a look at this is the open interest on the matrix side. So now the open interest overall, let's take a look at this. 2,200 to 3 of the call Oh, I'm sorry, 15,000 to 1,200 at the 30 strikes. Check this out, 17,300 to 342 at the 30s for September 20th, and 9,900, almost 10,000 to 100 here on the 13th of September, right? Very, very interesting. Look at this, January 17th, 2025 open interest sitting at almost 20,000 to 200, right? So we have some really, really outlandish numbers here, right? But the numbers don't lie. It really is what it is, and that's just about it right there, right? So take a look at this as well. The call side, 17th January 2025, almost 19,300 to 5,000. Very interesting. So why don't we go ahead and take a look at some technicals now? I know that this is going to be a kind of the place where some people want to know, right? But you know what? Other than that, I will say that I can bring in the picture right here. For those of you who are aware over what's happening here, why don't you just go ahead and elaborate with me in the chat what you make of the shifting of the eyes, right? So we have green eyes looking to the right when he longed it, and now this is that one part where. Where the kid says in Toy Story, "I don't want to play with you no more," and then he goes into that huge dream, right? So what? So what is it? Is it that it's falling and the price on Chewy was red, and he's now looking away from it, or is he just saying, or was he just saying that the price was capitulating at the moment because there was red during the price action of Chewy when this post was released today, 6 hours ago? So why don't you please go ahead and speculate with me, share with me what your thoughts are in the comments below, and I guess we'll find out together what that is, right? So now moving on to the technicals here, please take a look at GME here on the daily time frame, because this is absolutely powerful. This is what's called a bull flag, and it does have an implied target, right, or a price objective. And I will say that these targets were already looked at by us team. In fact, the target today at 24.48 is actually the target that we were talking about for an 11.19% move to the upside on the statistical backtest, and that gave us a $24.50 valuation from the fire of around. I think it was around $19 or $20, something like that. But yeah, very interesting times there. So take a look at this. The measured move here on the GME daily time frame bull flag would actually be right at about $28.22, right? Not bad there. So guys, I want to go ahead and just remind you that this is the ArcMastersCourse here. I am a stock trading instructor, and I really would love it if you guys signed up right away and made a difference for your trading career, right? Go ahead and get to know exactly how the ARCa Bulls team does it. Be part of now in approaching 300 master students that I've personally taught and mentored, right? So please go ahead and get in touch with me at ArcMastersCourse@gmail for that syllabus and that disclaimer. I'll pass you all the relevant information for the beginners charting and trading program, followed by the strategies program too, right? So go ahead and get in touch with me there as soon as possible so that you can make a change on that portfolio, right? So the top end price here, again, $28.28 from that bull flag breakout daily time frame. So let's go ahead and see if we have any other speculations within this, right? Please, let's go ahead and take a look at this. I want to go ahead and display this to you in this fashion here. This is the 4-hour time frame, and we can observe here that price action is leading towards an upside. So is there a possibility that we can go ahead and do this type of movement here where we come up and resist somewhere at that top end of $30, come right back down, start testing our support ranges here, right? And then make our move towards the upside. What this type of implied move would do is that we would then be creating what would be an inverse head and shoulders, right? So it would only make sense to do something like that. So this would be that formation right here. And I got to say that if there is speculation here to determine where that resistance is, then I'm going to go ahead and tell you that we can figure that out too, right? So let's just say that we had regression going towards the upside, right? So I guess let's see if we can draw it from maybe a 3-day time frame. There we go. Actually, it looks like maybe, there we go. There's that 28.28 right here, right? So that would make sense with a declining regression, just like this. Bam. right? And this would create the shoulder, come back down, and then the breakout, right? So if this was the inverse head and shoulders that we were doing, then there is also an implied target for that as well. And we're going to go ahead and meet all these targets together. So if we were to get this price objective to realize, we're getting taken to a target of about $42.24. So yeah, very, very impressive there with a top side on that price action. I got to remind you guys that we definitely have some pretty good closes today. The weekly close did make a move above the prior bar. It does look a little bit like like a hanging man there, which would show some temporary downside. And obviously we would usually have to take a look at the retrace strategy, right? So please remember that we would actually need for us to retrace around 30 to 50% of this prior bar, right? So as soon as we open up the weekly next week, it's going to be on this area here, leaving this pain behind, right? So yeah, leaving this candle behind. So this candle usually signals a potential weakness to the market, right? Because it is in that form, it is called a hanging man. So the hanging man would also, it doesn't have a price objective. It's a bearish formation. It doesn't mean that it has a perfect hit rate. It just means that psychological properties state that this is a bearish formation, and some downside price action could be had. But I will say that typically speaking, of course, we are to experience the 50%, 30 to 50% of the prior bar, which would be this one here, and it would be, I guess, if anything were to stop price from continuing towards that downside, it would likely be in this area here, 23.23 to about 23.40, right around there. And I got to say that would be probably confluent here with other closes as well. So take a look at this. It's very much close to the 3-day time frame close, which is right about that 50% as well at that 23.23. By daily time frame also closed. This is actually a little bit higher here. The 50% of the retrace on that by daily would actually be closer to this 22.73. And of course, we got the daily time frame close, and that is also confluent to the 3-day 50% prior bar retrace, which could be right at around this area here, 23.09 to around 23.40. Let's go ahead and adjust that bottom side, and everything will be pretty good to go, right? Yeah, so this is going to be a critical thing to do, guys. Remember, we were already talking about the potential direction of the market here because we broke out of this area here. Breaking out of this area here would show us that it has a lot of support, a lot of resistance within this area. So breaking out, we got to come back and test the validity of this support before continuing on to the upside, right? Now, speaking on the statistics, we kind of already had these targets lined up, right? So using a statistical backtest, using the criteria of volatility in linear versus, which is this here, right? Versus the stochastic momentum indicator on the daily time frame, specifically anytime that volatility breaks above that 15% of contraction with an upside bias on that moving average, and the little light bulbs being the histogram or the volatility component, that has shown us about 106 historical iterations on the daily time frame. Here is the gathering of the samples, right? All of this backtest here, massive backtest, and I performed it here for you guys, so no problem on that team. So yeah, that was 106 iterations, 80 of which were guessed correctly towards the upside, giving us an upside accuracy of about 75.47% for an upside thrust of a curious 11.19%. Now, if I can have you remember that 11.19%, and let's go ahead and take a look at price action here. And I just want you to see where that signal had fired off, right? The signal had fired off just right down here, right around down here somewhere, right? And this was the 11.19% taking us. This target here was taking us to 24.30, but using my discretion, I was able to use the top end of the price action here using other areas of resistance and or support, right? Inflection zones. And that's how we were able to determine the $24.50 zone. Hovering over this candle and looking at the OHLC values on the top left will tell you that we hit $24.48, 2 pennies off of that topside target using statistics, right? With a higher probability move towards that upside. Here's the cool thing. Check it out. We actually still have, remember that this downturn here on the stochastic momentum indicator, this is your direction bias, right, up or down. So having this decline here was indicative of, 2 days of price action declining. So that's okay. Things like that happen all the time. But please know for a fact that this is a large green a huge volatility candle towards the upside. This is likely to shift. The momentum indicator has not seen has not seen the actions of the present bar, right? As soon as this bar closes and we open up next week, that's when this thing is immediately going to shift and be reactive to what happened in the prior day, right? So I expect the price action to still continue. And just in case we were to, continue to the upside beyond the 11.19%, which reminds me, actually, this is where the 2450 came out. It was actually the move of 12% standard deviation from the firing of the signal, which was right down here at around that 2187 level, right? That gave us the target there. That was the target that we hit almost precisely today, right? So now following up or continuing with the data, just in case we moved even beyond that 12.12% and the 11.19% of the average move, there's also, I've also calculated the upper bounds and lower bounds of your first, second, and third standard deviations, right? In order for us to have an edge over where price action may or may not go for the next upside targets that we would combat here using the statistical backtest. So let me go ahead and just state them to you like this. If we move beyond that 11.19%, of course, we have other technical resistances in the way, but statistics would show that we would move to above 23.29%, which would lead to about $27.04. The next move would be 35.40% or 35.39%, taking us to roughly about this target here, right, of 29.68. And the next target would be the upper bound of the third standard deviation at 47.50%, and that would be taking us to 32.34. So these are the statistics here, but please remember that I actually expect an immediate short-term time frame pullback, right? And I would say the daily time, like we already stated, right? We already stated here on the prior analysis that we would have a support zone located right down here, 2310 to 2340. So if we were to use price action here, I guess that 2310 is very viable. 2314 is sitting right at the top side of this gap right here. So very, very interesting that would be the case. So yeah, I do find some higher validity with price action retracing to that 2314, 2313 level, right? So please be careful here with price action. I do see a continuation to the upside, specifically because I am noticing it here in the 8-hour time frame with a critical upside pivot there and expansion happening. Let's take a look at that 6-hour time frame. Re-expansion happening with an upside bias on a 6-hour, 4-hour time frame, completely spiking in volatility with an upside posturing here on that stochastic momentum. This has high probabilities of continuation to the upside, team, but just go ahead and remember that it's not only the daily that we have a retrace for, but we also have a retrace here, the 50% of that weekly time frame. So the weekly time frame just closed today at market close, and the likelihood of pulling back to 2342, sure, it's great, but the 50% of this bar would naturally be located somewhere down here, right at around that $23.11 zone, right? So right around in there is where you would take a look at that. 2311 to around 2285 would be your critical levels here. But yeah, team, I want to remind you to please make sure to join not only the trading team in Discord, but I want to see you in class. We're going to be starting those classes here pretty soon. Give it about 2 weeks, and we would be A-okay, right, guys? So with that said, I think this is a pretty good place to leave off the video. I will talk to you guys very soon. I love you very much, and yeah. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence, and everything will be cool. But with that said, I wish you well a very, very good rest of your night and or day and weekend, actually. And I will catch you at the bell on Monday. Adios.